In the next few episodes, I'm going to go into some detail about raising capital for self-storage in today's environment. I realize I've never gone into a lot of detail about it, so I'm going to take the next few episodes and do that. Now, I do not relate to myself as an expert in fundraising and capital raising, but I have raised money in the self-storage space, and I'll share with you what I know about it. And hopefully, if you're going to be using other people's money, this may help you. My name's Mark Helm. I'm the author of Creating Wealth Through Self-Storage, and I'm the creator of the Self-Storage Quick Start Academy. And what I do is support the small investor who wants to get in the self-storage business or who wants to grow their self-storage business, strategically do so in a way that creates true wealth and a fulfilling career. And I'll state it up front, if you're going to be using other people's money to grow your self-storage business, having a real estate attorney is probably a good real estate attorney who knows what's going on with private placements and syndication. That is the key to being successful in the fundraising business. Our attorney's been instrumental in helping us design what we offer, what we say about what we offer, and the documents that are involved in what we offer. But first things first, let's start at the beginning. Before you look at your first self-storage deal, before you talk to the first lender, before you talk to the first potential investor or partner, do your business strategy. Design your business strategy. What I teach in the self-storage boot camp is you design your strategy first. That will inform you what type of product you're going for, where you're going to be going for it, how much money you're going to need, how many facilities you're going to need. All that will inform you what type of offering and what type of deal structure you're going to be offering your potential investors. So as you design your business strategy, in the boot camp, we talk a lot about the team that you're putting together. No one can do it by themselves. Everybody has strengths and weaknesses. And what we do is we take our team that we're creating to fill in where our weaknesses are. And as we teach in the boot camp, your team can be either partners, vendors, or employees. So, for example, as I designed my business strategy, one of the weaknesses I had was I didn't have money. I didn't have much money. And so if I was going to get in the self-storage business or grow my self-storage business, I needed people to invest. I needed capital to use. So as I was designing my strategy, obviously what I needed was partners in the form of investors. Now, what I'm going to be doing in these upcoming episodes is sharing with you my experience. Again, I don't relate to myself as an expert. What I say is not the final word on it. There's people out there who know a lot more about it than I do. What I'm going to be doing is sharing with you my experiences and the processes we've used to raise capital from individual investors, not institutional investors, not putting funds together, but with individual investors, individual private placement. Individual syndication might be another way to say it. Now, what I've seen very often with the people I'm working with, if you're light on capital, you also very well could be light on the ability to sign a multi-million-dollar loan to do a self-storage project. Not everybody is, but a lot of people are. I was. Not only did I not have the money, but I probably wasn't strong enough financially to sign a multi-million-dollar loan. Now, the initial mistake I see many people making, especially in their thinking and in their processing about getting in the self-storage business and using other people's money, my experience is you're not going to be, the people who are investing the capital are also not going to sign on the loan. You don't want people who are putting the money in to also be on the loan. If somebody's putting all the money in your deal and they're signing on the loan, that's their deal. It's not your deal. It's theirs. You may go along for the ride, but there's no way I would put all the money in a deal and I would sign on the loan, and it's not my deal. So that's usually a mistake I see people make. Now, I'm not saying there aren't people who will put your money in your deal and then sign on the loan, but you probably don't want that. You lose control of the deal very, very quickly. At least that's been my experience. So before we get too deep into syndication and private placements and using other people's money, let's start where I almost always start, which is mindset. So what I'd like to do is talk about the mindset of, at least my experience, of the mindset of an investor. So in the world of raising money from individuals, and you want investors to invest money in your self-storage project, my experience is an investor is someone who's already made their money. Now, not always, but typically, the investors, at least in our deals, are usually second generation people who the parents have either made the money or the parents have owned businesses. Very often this second generation sells the businesses and has a lot of money, or the second generation owns and runs the businesses and has a lot of money. And as an investor, what these people, they've already made their money, or they already have their money. What they want to do is, one, not lose the money. They don't want to be the ones that lost the money, or they don't want to be the ones who lost some of the money in a bad deal. And two, they're trying to place that money, place the wealth that's already made, that they don't want to lose, place it in such a way that they're getting good, or what I'm going to call above market returns. So what I've seen, now investors won't say it that way, but as I've gotten into the world of the investors I work with, that's what they're after. They don't want to lose it. Two, they want above market returns. Now, there are a few doctors and lawyers who are working, making a lot of money, and then they want to invest the money and don't have the time to figure out how to do a self-storage deal. Some of those ultimately will become investors, but mostly 9 out of 10 people I work with, they've already made their money. Usually they're second generation. If they're first generation entrepreneurs who have made the money, very often they don't want to invest. They want to make more money. They want to own the deal. They want to run the deal. They want to be in charge of the deal. When I see investors are people who just want to take the money they already have and make more money with it and not lose it. So we all know people who will always tell you about the deal they got, like they bought a car, but they have to tell you what a great deal they got on their car. Or in my world of music, everybody's always talking about the deal they got on this guitar. And my experience with many of the investors, not all of them, but many of them, is that's the same way they are with their investments. They want to be able to brag about the investments, where they've put their money, and what kind of returns they're getting. Very often with investors, it's the same mindset. Want to create a deal that is a braggable deal for an investor to talk about. That's my goal when I'm talking to an investor. I want them to look good. I want them to look good to their friends and their family. Often that's why if at all possible, I still mail checks. You know, having money deposited in an account's great, but I like it when the spouse sees a check, and it gives the investing spouse braggable rights over the deals they're putting in. Even the spouse doesn't know very often that it's a 12% preferred return and they're only getting 6% in that check. They just see checks and it looks like that their spouse has made a good and wise investment decision. I want to create a braggable deal for an investor. Now that's investors. Partners are different. So I needed someone who could sign on a loan with me. It wasn't going to be the investors. In my world, investors are the last people who will sign on a loan. Why? Well, because there's a lot of risk with a loan. Investors don't want that risk. Yes, they'll put their investment dollars at risk, but they're not going to assume the risk of $1 million or $2 million worth of loans. They'll put their money at risk, but they're not going to sign. In my world, the investor will be the last person to sign a loan. So if I need partners that sign loans with me, I'm looking for people who want to create wealth, don't have all the wealth they're after, want to create wealth, and they see storage as the vehicle to do it. What I did was I was very lucky. I looked for operating partners. I looked for people who could help me run the storage business, would sign on the loans with me, take the risk with me, and I also looked for partners that knew high net worth people. I was very fortunate. I found, in fact, it was used to be an employee. She married into a family. The family she married into had owned the self-storage, so they knew the self-storage business, and this husband and wife team were good at operations, and they helped me run the business, introduced us to potential investors, and they're my operating partners. They sign on the loan, they take the risk with me, and help me run the business. Partners. Very different from investors. So my coaching is know if you need partners, know if you need investors. A number of people I'm working with, for example, they'll do the first deal themselves, smaller deal, get on the loan, put their own money in it, get in the business. Then, as they grow, they'll start by bringing investors on, and then as they need more support, then they'll bring in operating partners. Valid business strategy. It all hinges on what your business strategy is. And in the self-storage boot camp I keep referring to, that's the module 1. That's part of module 1. You create your short-term and long-term business strategy that will inform you how you're going to organize yourself and what type of team members you need. So in conclusion for this first episode, I wanted to talk about who I see investors are, kind of the mindset and the description of what an investor is as compared to what a partner is. And if you're getting in the self-storage business or new in the self-storage business, these are the type investors I see that are the best for because you've got a great story to tell them. In future episodes, we'll talk about that story. But for now, just understand who they are, what they have their attention on, what their mindset is, and know the difference between an investor and, if you need partners, what a partner is. Two very distinct, different goals of investors and partners, mindsets, and they serve a different function on your team. I have seen people try to come out of the gate and use funds. Basically, a fund is where you raise the money and it's not deal specific, but it's like what we call a blind pool, where you raise money to go out and buy self-storage, as opposed to, here's a self-storage deal, Mr. or Mrs. Investor. Please look at this deal and tell me if you'd like to invest in this deal. I have not seen people who are getting in the self-storage business have much success using the fund model to do it. I'm not saying it can't be done. I've just never seen it done very successfully and very effectively. Funds are something that after you have done a number of storage deals, have a track record, then you can start raising money blindly. In other words, institutional investors will give you money to invest on their behalf in self-storage, as opposed to, here's a deal, Mr. or Mrs. Investor, do you want to invest in this? So if you're looking to use other people's money to get in or grow your self-storage business, here's your assignment. Make a list of who you think potential investors are. I wouldn't go to them yet, but make a list of who you think the potential investors are that you know. In upcoming episodes, we'll talk about how to find them, what to say to them, how to structure a deal, how to present the deal. But just start thinking about who would be people that are in your world that already have their wealth and are trying to place their wealth in safe places that can get above market returns. So this episode was designed for me to share with you what I see as what investors have their attention on. And I look forward to going deeper into this world of raising money for self-storage in the next episodes. I'll see you there.